All right, folks, welcome to our first This Week in Crypto here in March 2022. It is looking to be a bit of a slide right now for cryptocurrencies. And for the most part, it's kind of been a tale of two halves of the week, really. The first half was looking quite optimistic. Prices were climbing after a good uh, weekend performance in particular, where prices soared right back above 40K, continued to climb, I should say, up to a high of like 44.8K or so for Bitcoin, before kind of hovering there and ranging anywhere between 43 to 45. And as of now, it looks like prices have dropped back down to about 40.5, 40.6K on Bitcoin, particularly just in the last couple hours. We're really seeing a little bit of negative performance. And with that, we've got plenty we can go over in terms of the on-chain activity, social activity. And of course, right now is a much more prevalent time where news is playing a factor in crypto. You know, there's a lot of debate over just how much real world activity even matters for crypto. If anything, a lot of people think that by default, if the world looks worrisome in some way, then crypto will actually be a better bet. This is something that people have known about something like gold and silver, precious metals, for a while because they have physical, tangible value. Obviously, Bitcoin does not have physical, tangible value. However, the premise of crypto is that it's able to stay afloat regardless of things like war, regardless of things like inflation to the dollar. In fact, inflation and those kinds of things are what a lot of crypto enthusiasts say is most bullish about crypto because it's a hedge against fiat inflation. We'll try to get into all of that a little bit. But for now, we can confidently say that real world events are impacting cryptocurrency and have for most of the year, in all honesty. So we'll get into that, and perhaps can even have some chatters, talk about their take on all of this and how the last 9 days since war broke out has impacted things, and potential inflation still a major worry at the moment. But for now, let's take a look at the last 7 days of price performance. We see mostly green, which might surprise a few people. It's felt like it hasn't been this good, especially with a bit of a recency bias. Bitcoin, of course, here we see still up 5% over the past week. It's sitting at about 40.8K. To begin the week, it was actually below in the 39-ish range. And Ethereum is actually just barely positive as well, sitting at 2680. Then we can see some standouts. We've seen Terra Luna continue to really kind of defy the markets. This is not an isolated week in terms of its ability to break out and ignore, major drops. And it's when things are flat or Bitcoin is rising, Luna, every time we look up, appears to be one of those projects that is soaring a little higher than the rest. That's, of course, not investment advice. And I should say right now, none of what we talk about here on the call is going to be investment advice. It's simply something we've noticed for the greater part of at least the last 6 months. Luna has performed quite well. Take it how you will. That could mean that it's more due for a retrace or more due to continue this path. So it's definitely something that is of higher polarization than most other assets here. But Luna, regardless, is up 37% over the past week. Cosmos, we see up 33%, near 30%. Waves was the biggest of the top 100 assets, surging a huge 94%. Thorchain / Rune, 64%. Anchor, 46%. And those are really the big standouts of the past week here. So with price performance covered, let's take a look at a few of Santiment's recent articles, beginning with one that was just released a few hours ago that discusses the exactly what I was just mentioning about Bitcoin and whether it's kind of a safe haven and whether it can defy worrisome and risky times in the real world. We talked a little bit about how it's performing against gold, how it's performing against the S&P 500. The overall prediction is essentially, we think that a lot of people are flocking to gold right now based on price performance, and a lot of that dependency is going to sort of foreshadow whether Bitcoin can follow suit right now. So there's kind of an all-in mentality where if the media and the crowd start to really say, all right, it's time to really go all in on gold, that's the one that's physical and real, and Bitcoin is just this made up internet money, that's the time where Bitcoin should start to actually show itself as an opportunity. Because when your CNBCs and traditional media and bearish calls on Twitter and Discord and Reddit, if those all start to pop up in unison, that's going to be the sign that a top is likely to be in for gold and a bottom is likely to be in for Bitcoin, especially if they continue to go complete opposite directions, with gold surging and Bitcoin kind of in this, if you want to call it a decline, it's obviously up 5%, but at least kind of in this volatile range where it's unimpressing the crowd right now. So that's one article we put out. We also just dropped our monthly report about 8-9 hours ago. And we talked all about, of course, what happened 9 days ago, 10 days ago, wherever you are in the world. Obviously, Russia declared war on Ukraine. Further developments are happening all the time. There are major pieces of news that are coming up. Crypto platforms are discussing them, and those are very much still impacting crypto's prices. The initial reaction, of course, was for crypto to drop. We mentioned right when it happened that there were some similarities we were seeing to the reaction of war to the reaction of COVID-19 back just under 2 years ago in mid-March 2020. And in that case, of course, the reaction was way more severe. Bitcoin and almost all assets dropped 50% or greater. Before the following months, just watching crypto surge and not only make up for the losses, but continue on toward, of course, 2021 all-time highs, multiple records broken all over cryptocurrency. It's debatable how much of this was caused by COVID, but at the very least, we learned that there was an overreaction to how negatively impacted cryptocurrency should be over a major world crisis. And obviously, war and the pandemic are very different crises, and it is not our place as a data analytics company to make commentary on that. But we saw that, of course, there was a downturn in prices on crypto. I believe Bitcoin dropped around 15%-ish at most when the news broke on the 23rd, at least where I was on the 23rd. I think for a lot of you it was the 24th. And then over the next 12 hours after that, it made up all of that ground, came right back to where it was in the low 40Ks, and then proceeded to continue climbing. And it looked like kind of a mini pattern or version of what happened with COVID-19 on a much quicker timescale. But now it's, of course, ranging back down, low 40Ks. People are starting to worry again that maybe the war does have an impact. And they're right, it does have an impact. It just doesn't necessarily mean that it's going to be a negative one. We can see here that the topics and the mentions of war absolutely blasted off with the initial announcement, and things have been declining a little bit. And this is exactly what happened with COVID 2 years ago. Initial shockwave, and then not quite this quick, but more gradually, we would just see a slow decline of how much it mattered to the crypto community. So right now we're, seeing roughly half the amount, maybe a little lower than half the initial amount of discussion that we did when it first started. And if that continues, it should be a good thing for crypto. Now, there's still going to be other factors, the Fed decision and the S&P 500 correlation that hasn't gone away. We can see that's what's being compared here in blue. And after the big spikes in the early part of February, there really hasn't, it's neutralized again, and there hasn't been much discussion because this, of course, has taken precedent. But if this starts to decline and the Fed announces some inflation rates or interest rates this month, that can absolutely shift the narrative back over to here, even with a war going on, as crazy as that sounds. So we'll see how things play out. We're not going to predict, the developments of war whatsoever or what the Fed does. But if this starts to go up a little, the blue spikes as red goes down, that's probably going to be a bit worrisome, because most times that the Fed discussions pick up, it results in a decline. And that we've seen more evidence of that than spikes of war discussion, where we saw an initial spike down, but then a big climb. So the verdict is out right now. I highly recommend looking at these two search queries together, and you'll see a nice picture of how things are developing. As far as a few other things about, covering the past month, we talked about how the Tether supply has been rising in terms of key stakeholders, not necessarily whales, because we have a pretty wide range set. We're looking at Tether owners or addresses that have anywhere between 10,000 all the way to 10 million USDT. These are, of course, massive spreads, and 10 million is definitely a whale if they have that kind of funds on their address. But 10,000, more of a shark, or even below a shark. Regardless, when you combine them all together, you see a nice correlation with price over the long term. This is just a snapshot of the past month, and we see that the accumulation has been quite noticeable. If we have time, I'll bring it up on Sandbase so we can look at it in real time and zoom out a little. But on the article, we talked about how the Tether addresses of this variety are definitely rising. I can't remember just how long it's been since we were last here, but it's been a few months. And with this, the initial reaction is that more Tether is a direct correlation of whales selling off their crypto. And that's not the case. In fact, usually this set of addresses under this range kind of go in tandem with Bitcoin. That's why we chose it after a little bit of back testing. And with Tether going up and Bitcoin essentially being in a flat/slight decline, depending on what time range you're looking at, it's not the worst thing in the world. Obviously, we put a slight precedent on what the Bitcoin whales are doing over Tether large addresses. But with Bitcoin at least not looking like it's declined over the past month, it's about dead even, and Tether going up, it means there's a little more buying power for high stake addresses, despite a kind of polarizing amount of confidence in where Bitcoin's price is going by the whales. So maybe net neutral, if anything, in terms of what the high stake traders are viewing the market situation as right now. We'll get to NVT in a moment. One other thing I wanted to touch on was the Bitcoin and Tether supply and exchanges. Now, Bitcoin has been in a very long-term decline in terms of the amount of supply, ratio-wise, of how much Bitcoin is on exchanges. In fact, it's right about here, at the end of February, we saw Bitcoin hit its lowest amount. I know I highlighted it since November 2018. So we're looking at, what's that, about a 41 month low in supply on exchanges, percentage-wise. That's huge, 10.7, 10.8%. of Bitcoin being where it was, 1, 2, 3 years ago, especially 2 to 3 years ago when things were not looking so good for Bitcoin. This is great to see because it indicates that there is much less risk of a massive sell-off. Of course, there's still plenty of whale addresses who have their Bitcoin on exchanges and can, take a big sell-off at any time. But all things considered, in a vacuum, you'd rather see the amount of Bitcoin on exchanges down here than even where it was a month ago, certainly where it was 2 to 3 years ago. So that's nice to see. On the Tether side here in blue, it's actually looking the same way. It's interesting how much they've correlated. And this, of course, goes against what the large share stakeholders are doing for Tether right now, because large shareholders, stakeholders, are climbing in terms of how much they have in their addresses. But particularly on exchanges, we'd actually like to see Tether moving in the opposite direction. So that's a bit of a bearish sign because there is less overall buying power overall for all of Tether, but more buying power for the large addresses. So take that how you will. It's a bit of a good news, bad news type of situation at the moment, but it's something to monitor. Right before this decline that started in early February, Tether's supply was actually going up for around a 2 to 3 week stretch. Before that, it was all over the place at the end of 2021. But when it was going up in January, that was actually when Bitcoin's price was starting to turn upwards. And then we had this downward slope here, of course, a recovery here, and then obviously volatility that mostly sent the price down until right when war news broke. And look at how there were a few days where the Tether supply actually went back up again. And once it started going down, so did the price. It won't always be that correlative. Obviously, the surge here came with a downtick in Tether. So mostly look at this as a long-term metric, not a short-term one. That's what I'd recommend. And then one other thing here on the article was the network realized profit loss metric that essentially measures the amount of profit or loss that is on the overall BTC network by calculating address performance. And generally speaking, when you see these large spikes designated with red arrows, it's exactly what you would think. It means that the network is at a bit too much profit compared to its usual resting average. When you see it down here, that's indicative of addresses being at a loss. And with these spikes, it usually is correlating with trader panic, selling at a loss. And of course, we want to watch for these because they are almost always going to at least be short-term buy opportunities, usually not immediately, which is a good thing. It means that it's a nice leading indicator with some alpha. And we can see that with each of these green arrows, we either had a slight delayed uptick there, of course, and here, right close to the bottom. And then this one was right on it when the war news broke on the 23rd and 24th. And then on the red side, of course, this was the huge spike where there was a lot of profit taking and the network just, for whatever reason, a lot of people taking profits, selling, and it came with a very minor spike down. Things neutralized quickly, and we saw another one here, spike or decline down, and then another one here, decline here as well. So all 7 of these arrows, you can clearly see that price went the direction that network realized profit loss foreshadowed. So it's a good metric to keep your eye on. I recommend it. It's a good one to look at in tandem with MVRV, which is a little more correlative with time frame results from traders, and we'll touch on that in a moment as well. So yeah, that's the article. I highly recommend you check out both the monthly report and the one that was just dropped by our awesome staff about Bitcoin being the safe haven right now. All right, I'm not sure if he's there yet, but Maxim should be joining soon. Are you with us yet, Max?
Yes, yes.
Oh, you are?
No,
Perfect.
I am, yeah.
Welcome, welcome. How are you, my friend?
Good. Thank you. Today, you already have it on the screen. Exactly. If I say anything, I will keep it very short today. I also read in a comment now for our last week, people say that when I'm trying to cover too many topics, it's difficult to follow, and I understand it. I try at the same time dig very deep, and when you dig too deep, it's by itself already not easy to communicate. The deep underlying process, and when I try to cover many of them, it's becoming more complex. So for today, I would say only one thing, and then you can continue, Brian. That in my opinion, and you can, Max, share the link to this insight I wrote actually today. I was thinking, analyzing for quite some time, maybe last month or two. There is a good chance we will see a surge in gold demand, and maybe not so much in Bitcoin for time being. And there are some reasons for it. And it might take us some time before we see Bitcoin to reclaim a position of safe haven, in times of crisis. I do believe that Bitcoin will eventually become hedge for crisis time, but we're not there yet. And based on my observation, how little most of people pay attention to gold, there's a good chance it will pop now. So, this is one message. So I will keep it only to one message, and I will not say much, even though, of course, I have many opinions on many things. But this is important to keep in mind, because once or if the gold really pumping, there will be a lot of noise and media coverage around it, not to lose clarity on what's really going on. So I laid down in this insights a few thoughts.
Yeah, I have a quick follow-up question on that, if you don't mind, Max. And I'm sure the crowd is interested in your answer. So we talked about COVID-19 and the comparisons to what's going on now. At the beginning of the call, I mentioned how obviously there was a huge reaction where prices dropped off a cliff, and then over the next couple of months made up massive ground and then some. I didn't mention the fact that gold also made a huge recovery, and you can see it clearly right here in gold here, the huge surge. What do you think would be different this time around, if anything? Do you think that it's going to be a repeat just based on history and how people are speculating right now? Or is it more so that gold has the most ground to make up and we're already sort of seeing the same pattern, so we think that will continue?
Well, it's all speculations, of course, but there is a change to what was in after COVID. After COVID, we were still in a situation, a lot of money, even more than before, being brought into circulation by governments, and no inflation yet. And there were no plans to increase rates. Everyone were sure, governments were sure they can keep it at the bay. There will be no inflation, and refinancing will be around zero. In Europe, even negative. German government could borrow money for negative rate. So that was a situation back in 2019. Now it's different. Everyone knows inflation is here, both in America, both in Europe, but not here in Switzerland, or at least not yet. And everyone is a kind of fear against inflation. So, and it's very easy in this environment where you need to cover expenses, you need to print or bring even more money, and inflation is here, to come back to feeling or pattern. Gold is a hedge against inflation. Bitcoin, we don't know yet. It has no proof and track record against it. And both crisis and inflation. It was very good for the time when there was a lot of money but no inflation. Now we don't know. I do believe it will show itself and perfectly show that this is the best or the modern version of gold, but it might take time to overcome the patterns which are still there for many players, for many big players. And it's not easy, you know, when once you have some psychological patterns, it takes a little bit effort to overcome it. So when we might be witnessing this kind of battle around it, is it physical gold or digital gold? And it's an interesting topic. I think the next 3 to 6 months we'll see quite a lot around it. So there is a difference, yeah. And you're right. In 19 boast grows a lot, but here's also you need to take log scale to see real growth. Bitcoin grew more. Now it might be a bit different. We might see, because the war is also it's a different environment.
Yeah, I mean the presumption of gold always being a hedge against crisis will probably always be there because, as discussed in the beginning of the call, we think that we know that gold historically is the sector that benefits most if it's a crisis. The question is, you know, how much is this a crisis, right? We all know that war is a big deal, but news is changing every day. It's not our place to decide what the real world ramifications of all of this is right now. Right now, it's very much a serious matter. Things could very much, in the midst of Bitcoin making up its mind as to how to react to a crisis, the crisis could diminish or the crisis could get more, and that can skew the data of how much we're seeing the impact here. But overall, the question is there room for both, right? Is there room for both Bitcoin and gold/silver,
of course,
precious metals to both be hedges against crisis? Most think the answer is yes, but it might take Bitcoin a bit longer as a much newer investment compared to, of course, gold that's been around for centuries and all of history.
Yeah, it's possible. It's possible. And there is some fear among some participants that because gold can be used by sanctioned countries, like now it's been used in Russia, what if governments prohibit? Yeah. So, and on one side, I like when there is a fear, and there is a potential for growth, but initially it also does not let growth to be too fast. So it's a two-sided sword. It's getting slow through resistance, but once this part, quite big part, which has concerned, change their mind, then we see this explosive growth, recognition, trigger points. Yeah, so it's good to be positioned before. Once you see this rapid growth, it's for most of us here on the call, it will be very difficult to act. You will say, okay, I will wait for pullback, I will buy lower. It will not get lower. So better be positioned before.
Yeah, exactly.
And I would have both, Bitcoin, physical gold if you can, for the time being. But eventually, if you cannot move physical gold to convert it fast, maybe just wait and just keep your Bitcoins. They should, or whatever, crypto, Bitcoin, Ethereum, both are fine. Should be eventually fine, in my opinion. And the thing is also, when events are coming, market price, everything very, very fast. Yeah, and it's never that market price events which are happening today. Market priced in the expectations. So whenever events happen, it's already in. It's been priced in for some time. We often see a reversal. So for the war, I would say most part is already priced in. There is still some growth. There is still some room to go even lower, just because it escalates more and more and more, but not much. So it's, we might be seeing a turnaround pretty soon. But okay, so the second topic, and I promised myself to stick on to one per week.
No problem. Yeah, appreciate it, Max. I think it's a very logical take that you're making, and obviously so much is going to depend on the news that comes. So we'll see how things go, and of course we'll dive into on-chain metrics in just a moment, so we can see how things look based on utility and things that typically fluctuate cryptocurrency prices when news is not such a factor like it is now. Last thing before that is we can look at the trends for what's been a top 10 rising topic in cryptocurrency at the moment? Now, there are a few here that I recognize. Forgive me, I have not researched, what the reasoning is for all of these being here, but I do know that MetaMask is trending right now because countries like Venezuela, and it might only be Venezuela, I'm not sure, they haven't been able to log into their accounts, which is a big deal. That's, people's wallets that they aren't able to access. I don't think it necessarily means anything's happened to the funds, but I think it has something to do with a block due to political reasoning. And so that's been trending right now. That's definitely a bearish sign because if the safety of a wallet or people's funds are at risk and panic is ensuing, that's a big deal, and people are going to be monitoring that until there's obviously a return to those citizens' ability to log on and get their MetaMask funds. So certainly an important one there. We do see that one war-related topic is in the news right now, and that's sanctions. We can clearly see that all of the related words are Putin, Russia, sanction, non-plural, government, people, Russian. So sanctions appears to be the topic of the day right now. We clearly see that the discussion of the rest of the world handing down sanctions to Russia have been a keyword of fascination since the war broke out, essentially even before it did. And people were speculating that if war broke out, sanctions would be handed down. And it's very much, something that is on crypto platforms or crypto members on platforms' minds right now. So keep an eye on that. And of course, as we mentioned at the beginning of the call, other topics, Russia, Putin, Ukraine war, etc. So that's, the quick snapshot of the top 10 right now. And we're about halfway through the call, so it's a perfect time to get into on-chain stuff. Stay tuned because Max Balresh will be putting up a poll in about 10 minutes to see what assets you'd like us to look at the end of the call, the last 20 minutes or so. So we'll do that in a moment. In the meantime, we'll look at Bitcoin. If we have time, maybe even some Ethereum as well. But Bitcoin is obviously the topic of conversation, especially during polarizing real-world event times like right now. And we'll start with circulation. We'll just look at 1 day and a 7-day smooth moving average for now. As far as 1 day circulation, one outlier really stands above everything else, and that was here on the 27th, about 3 to 4 days after the war announcement happened. And this actually happened right before a local top, which is interesting. Regardless of whether, there's a high ratio of whales selling here or whales buying here, based on what we're seeing, it's a little more selling than buying. It's still a good sign when you see circulation spikes, especially for Bitcoin. Overall, it simply means that the events that are unfolding right now are grabbing people's attention, and more unique tokens are moving from address to address. And that is historically always a good thing overall, because dormant tokens have to be moving with a spike of this nature. There is more utility overall, and that's what we look for when it comes to any cryptocurrencies. A higher usage rate, more implied value for moving funds is demonstrated when these spikes happen. So overall, if we look at the NVT chart, which has not loaded, sadly, I can just pull up the monthly report though and tell you that this is what it looks like right now. We've been in semi-bullish territory according to the NVT model since all the way back in October. So we're going on our 6th month now. This is, of course, a very short sample size in March, but going on 6 months of semi-bullish or bullish indication according to how many Bitcoin are being circulated, unique Bitcoin, so it's ignoring wash trading, and how much of them are being circulated compared to the market cap. So it's a simple calculation of market cap divided by unique tokens moving. When we see this red, that's when the huge drops occur. Obviously, it was still able to recover a bit and fluctuate up and down before we saw our semi-bullish month here, instant skyrocket to a new then all-time high, and then a new then all-time high the next month as well in November. And this is the official all-time high of Bitcoin that occurred a little over 68K there. However, prices dropped off a cliff despite circulation staying semi-bullish. So that would be definitely a bullish divergence, right? As long as the amount of circulation is staying this high, it's a good thing. And we can't be too worried about prices dropping. Of course, there are dozens of other factors that play a hand in how prices are fluctuating besides just circulation. So take that for what you will. But overall, it's a very good sign that we're going on a 6-month so far in March here of bullishness and a highly justified amount of Bitcoin moving compared to where the market cap currently sits. So that's just a quick update on circulation. We can also look at the daily active addresses. And we see that it's taken a bit of a rise here, but really nothing that is enough of an outlier for us to be too excited about. I'll plot a 30-day moving average on top of this. And we see that it's mostly been a mild decline that went up until about early February. And then it's actually seen a slight uptick. This isn't really huge though. If we take like a long-term perspective, you know, compared to where things were a year ago, this was about 1 year after COVID broke out. The daily active addresses were consistently above 1 million as I hover my mouse here. This is of course an arbitrary number, but we've been stating for about a year now that 1 million is kind of a key factor for Bitcoin to look healthy and justify prices continuing to rise, at least until we, you know, start getting into new all-time high ranges, and we can't predict when that'll happen. But when we see, you know, a long sustained stretch where, you know, daily active addresses are in the 700 to 900 range, that's when you see a ton of the volatility, at least in recent memory in history. We did start to see, you know, spikes above 1 million here as prices were really surging in early October. But the slight decline here is a concern. We're certainly not where we were in June, July, but we have to wait and see for now. Daily active addresses is essentially neutral while circulation is looking semi-bullish to bullish right now. So take that for what you will with the two main utility indicators that Santiment tends to cover. Moving on to MVRV. So over the last year, we can see when things really spiked high, corrections happened. When MVRV got really low, that's when the bottoms tend to come in. Nothing new there, but we also know that the support and resistance levels look to be about there at plus 15%, and get right about on it, that will be fine. Negative 15%, of course, is the bottom indicator, and anything below it, that tends to be when historically good buy opportunities occur. We see that in January, late January, we got below there. You would think that we got close in the 24-hour period after war was announced, but not really, actually. We got to about negative 10%, which is certainly justifiable for a good opportunity compared to normal. But it wasn't as good of an opportunity as what happened in late January when everyone was talking about the Fed and inflation. So take that for what you will. Regardless, this still was a good entry point according to MVRV because prices surged very quickly just on this short sample size. If I shift and drag my mouse, Bitcoin jumped about 25% just over this period of about 5 days or so. Once it got up to that 23-25% gain, the MVRV got up to plus 8.4% before declining. And I'll zoom in here just so we can see it in a little more of a zoomed in lens. We definitely see that just as of yesterday, MVRV dipped below 0% again for the first time since late February. And with that, price has started to rise again. it's still, you know, as of now, right? We just talked about how prices look like they're declining once again. So on the really zoomed in scale, we see that it's really right at about break even now. So no real skew for the 30-day MVRV one way or another. And this will be kind of a point of things going either way. Things can start to rise again. We start to see things get more risky on the MVRV side, or it becomes more of an opportunity if we start to look like we did in late February once again. So that's MVRV. Let's move on to funding rate. Funding rate is essentially people putting their money where their mouth is, right? And we'll get to social volume and how people are talking about crypto in a moment. But first and foremost, we can look at how the actual long versus short ratio is looking on exchanges. And this is BitMEX. We see that it's up a little bit, mostly neutral because it's showing 0.01%. That's kind of the resting state for funding rates for all assets. So nothing to report there. Binance, same thing. You'll notice these candles are wide because they update every 8 hours, whereas DYDX and FTX update once per hour, once every hour. And that's why we see a lot more frequency. Right now, things look slightly up. It's showing more or less, this is kind of an even point here. I know that even point intuitively would be 0, but as I said, most funding rates rest around the 0.01% range. And then FTX, if I put on filled area, it did have a good downtick here as far as the funding rate goes, but it's neutralized out for now. So nothing notable to really say about funding rate. And just as MVRV is break even, so are people's longs versus short tendencies right now. It's kind of a wait and see. A lot of just above 40K seems to be the resting point where people are equally polarized toward the bullish or bearish sides of things. So, you know, maybe that's not the most helpful thing to see, but it is helpful in the sense where we know that there is not a serious skew and large crowd presumption for things to move one way or another. All right, I'll zoom out once again. And we already covered supply and exchanges. I mean, this is the 6-month range, guys. I'll go back to 2018 because I mentioned that was the last time Bitcoin's supply was this low. And yeah, we can see that really since it peaked right around Black Thursday, when it was at 16%, it's mostly just been a continued decline with obviously a few upticks here and there. When you do see these upticks, it is nice to note that it can often be a foreshadow of a correction like it was after the first time all-time high that occurred back in April 2020. There wasn't really any uptick here, of course, to warn, but if there is one, that can be a good warning sign for you. That being said, 10.7% or so supply and exchanges for Bitcoin, lowest since November 2018, which is a very good sign. As far as whales, we already covered that, so I won't dive further. Slight decline happening right now, but long-term perspective, you can see that we are still leaps and bounds in terms of how much of the supply Bitcoin is holding. The whale supply of how much they're holding is still significantly higher than it was, 3, even 2, and 1 year ago. Exchange flow balance, not much serious to say. There was a pretty big downtick in late January as far as outflow goes, but this is more or less going to correlate with the overall exchange supply decreasing over time because we see a lot more outflow spikes than inflow, which explains exactly why it's declining right now. Network realized profit loss, we covered that. Development activity, not too relevant or exciting at the moment. The continued rise in Bitcoin development activity is a good sign though. All right, now social volume and dominance. Before we do that, Max, if you would like to get that poll up, we can look at what people think in 5 to 10 minutes, okay? All right, social volume, thank you. Social volume, let me zoom in once again. We'll do the last 6 months. We'll screen that. Social volume, guys. The trend over the last 3 months in particular shows that there is a little bit less discussion related to Bitcoin than there was back in December. There isn't too much we can speculate from this. If anything, less social volume overall in cryptocurrency can actually be a good thing, because it means that participants are dropping out and capitulating or have given up on either the flatness or the decline that Bitcoin or cryptocurrency overall is seeing. But the dominance is what I think is a really telling sign and a good thing to focus on right now. The reason being, we have seen a definitive correlation between when the dominance of Bitcoin compared to the other top 100 assets in crypto which is how this is calculated. When it's declining, that's a sign that people are beginning to put a little too much interest into altcoins. When it is increasing, that means that the cryptocurrency that drives the rest of the markets is seeing a significant amount of attention, and that's generally good for crypto. So this is a very simple metric that shows, up being a good thing for crypto, down being not so good, especially for kind of a perspective when you see a rise happening compared to recent weeks or months, like we've seen between, January and now. That's a good sign, especially the fact that Bitcoin was climbing in interest. It really peaked right about at wartime, got back above 20% in discussion rate, above 25% even. And that was a sign that people were paying very close attention. It doesn't always, you can see how much noise there is. This doesn't always mean that a big spike is going to mean that prices go up or anything, but it means that people are paying increased attention to the coin that matters most in driving cryptocurrency up and down. And that's generally more good than it is bad. Now, that said, ever since the spike that happened 9-10 days ago, the dominance is starting to go back down again. And because altcoins have had, good isolated moments, like we saw with Terra Luna, for example, there's a little more increased focus on altcoins once again, which is a concern because we don't want to see a decline like this. This kind of dominance with rising prices is a bearish divergence, to say the least. So we're seeing a bit of a mini one here where dominance is starting to go down. We, of course, already had our rise, and now it's fallen maybe halfway back to where it was when the big war drop-off happened. So keep that in mind and pay close attention to see if dominance starts to pick up, especially if Bitcoin drops below 40K here, today or imminently in the next few days. So there's dominance. Quick look at weighted sentiment. So we're looking at this is 1 day. I'll zoom out a bit to a 7-day scale. I believe this is an incomplete bar. Our data team is actually ramping up how these kinds of metrics show, and are now hiding incomplete days a little bit better, but it's not quite perfected yet. So take this for what you will right now. It's definitely negative sentiment going on right now, but we can see even for the last 2 full weeks, things were starting to look negative for the crowd's perception of Bitcoin. For those who don't know, weighted sentiment is calculated by multiplying the social volume of Bitcoin by the ratio of positive versus negative commentary. The lower it is, generally the better opportunity it is, because it implies there's capitulation and negative bias, people selling at losses during these times. When things are super high, this would be mildly high, this would be super high here. We can see right around the 2 all-time highs that occurred in both October and then a larger one in November. There tends to be corrections around this time. This one happened right during the top. This one happened right after, as people were euphoric and expecting that this was just a very temporary dip. Things were looking to be picking back up, and then boom, they got hammered with a downturn here. So as long as, people are ignoring the dips and thinking that, these are all dips to buy, and euphoria still seems to reign supreme, that means that you need to be careful, because you don't want the crowd uniformly ignoring dips and thinking that they're all opportunities. You want them to actually be worried and fearful of these dips. And that's what finally happened here. Of course, not a great example because things still dropped off anyways, but that's not always typical. And this was a better example because everyone was very fearful when the war news broke, and that's when the price rise actually happened. So that's Bitcoin metrics. Looking at the time, 10 till the hour. How are the results coming in thus far, Balresh? Do we need a few more minutes?
No, I think we are good.
Beautiful.
First place right now is API 3.
Interesting choice. Not one that I have looked at before. It is an ERC20 though, which is fantastic. So we've got plenty of metrics we can look at. Let's start with circulation here and see how we're looking. As far as one-day circulation goes, we've seen our share of spikes. Most of these spikes appear to correlate with tops. I'll take off the 7 days so we can look a little closer.
Brian, if I can suggest, because API is relatively new project, I mean, relatively compared to many others, I would look into things like mean dollar invested age, just to see if the all-time holders were shuffled to newer holders, then whales, how they behave in age consumed and network growth. These things, I think, could give us some information.
Yeah, good idea. So starting with mean dollar invested age, just as Maxim suggested, yeah, we saw one huge drop off that occurred in July. We did see a big rise and then a big fall, but overall, this was a signal that prices could definitely surge because the average days of investment went from about 127, 128, all the way down to 41. And was staying, it takes a while when you see this kind of drop off. It stayed quite low, which implied that dormancy opened up a window of opportunity for prices to really surge. And that's what happened. As of now.
And can you place on top of it network growth?
Yeah,
sure. Just on the same chart. I want to see, it will be like an aggregated view on network evolution, let's put it this way. Okay.
So here's how things look all together. We can see that the network growth and daily active addresses definitely spike together in most cases, which is pretty normal for newer assets. We see that the spikes in new addresses occurring and daily active addresses surging tend to correlate with tops. Eventually that kind of flip-flops for Bitcoin and Ethereum. It's actually usually positive news when you see this. But for now, these spikes are functioning as top indicators. So it's something to keep in mind if you're an API 3 holder right now. If you see a sudden surge, be careful because historically, just about every time, based on what I'm seeing, they've correlated with price corrections. And then, of course, mean dollar invested age, just in terms of recent times, a few very minor drop-offs. But, this one, looks like my mouse is running out of battery. I've got extras, don't worry. It looks like the latest few drops haven't really made much impact. In fact, it looks like they correlated with tops for now. So unless it's a major mean dollar invested age, and correct me if I'm wrong, Maxim, I think that these are kind of more top indicators.
Yeah. So far looks, if you are into coin, can hold it. I wouldn't be worried to sell. If you want to enter, I would wait. This kind of things. Risk to reward is not the best. It still can easily go down. From absolute numbers from directive addresses, what are we talking about? How much is it per day?
So I'll do a
not
smooth
on
moving
not
average.
on the spikes, but I mean like on average
Just
days.
yeah. Let me check out a 30-day, and that can give us a good indicator. So on average, it's rising slightly, probably mostly due to just this spike.
Yeah.
But right now, the average is about 225 active addresses per day.
Yeah. It's
So
low.
relatively small. Yeah.
It's low, which means higher risk but higher reward. It means little people still participating in the speculative activity.
Yeah.
Which in case of bear market, it's just will go very fast down. But in case of now, if we go up, it can also go very fast up, just because not many people are participating in it yet. So it's really APIs, high risk, high reward game.
Yeah.
There are
Perhaps
other assets which are lower risk, but this one is high risk. Mm-hmm.
I was going to say perhaps supply distribution can give us some insight in how specific behaviors of large versus small stakeholders are driving those daily active addresses. With API, it looks like it's sitting at about 661 right now. So if we put around 100,000 to 1 million coin holders and 1 million to 10 million, it looks like they hold in combination about 27% of the supply. So that's a pretty good number for us to combine right there, hit confirm. And this is what kind of the key stakeholders of API3 are doing with their funds over the last year or so. Looking at this chart, we see some alpha, I would say. Certainly here, when they took a massive amount of profit on July 10th or so, they were holding 20.3% then, and they bottomed out about half, 10.4%, just a little over half of what they were holding just a few weeks prior. We saw the big dip. The dip occurred here, and then it looks like they bought back in on the way up. So definitely a delay there, not the best alpha. This was a nice accumulation they took that led to a rise, followed by a decline. So this was very good alpha, where price was reacting a few days after their moves. And then there was this huge accumulation that did not pan out, but it's difficult to say, how relevant that is, because all of markets were declining right here. One thing I like to do is look at the actual BTC price to see how.
One more thing, Brian, was it amount of wallets or combined balance?
This is the combined balance of the addresses. Would you like to look at the amount of wallets instead?
No, I wanted to see a balance. Okay, well, that's...
Yeah. So as far as the actual true BTC price, which is a little more relevant to see how much alpha there is in whale behavior, it looks like, there we go. It looks like these whales are doing an okay job. I like seeing things like this where they accumulated a few days prior to the big spikes. Even right here, they started accumulating a couple days prior to this spike. This is really the big anomaly, because there was a huge uptick in how much they were holding here, but prices were declining. We did see this, but it didn't really correlate much. And then I see eventually things caught up fast. So it's possible that this accumulation that happened back in late December inevitably led to a breakout almost a month and a half later. I wouldn't be confident enough to say they were directly correlated, given how much time passed. But it's a good sign nonetheless that holders with between 600,000 all the way up to $60 million held in API3 are at their highest point that they've been in, at least over the last year. So that's very useful to see, and I appreciate whoever suggested this coin. It's certainly an interesting one I haven't looked into much. Any other metrics you can think of, Max, that might be relevant? I think development activity is a good sign here, that overall over the last year, per day there is around 14.5 submissions.
That's quite good. Yeah, quite good.
Now we're at 60, a little over 60. So we're looking at about 4 times rise. social dominance. We saw a bit of a spike right at the top here. That's typical. So when you see smaller assets suddenly get a relatively huge spike up, that's an indication that the crowd has now discovered it, and that's usually when tops occur. You want to have small projects stay under the radar while they're surging, and that would imply that the surge can continue. But spikes like this, or even this, or this, almost all of the big social dominant spikes, those are the times you want to stay away. Weighted sentiment, nothing really to say there. So yeah, I think that's a good quick, I don't know how long it was, 7 to 10 minute coverage on API 3. Let's look at one or two more if you have a few more suggestions, Balraj.
Yes, the second one in line would be UMA.
Oh, you mean UMA, yeah.
Yes, exactly.
Perfect. Yeah, definitely a well-known ERC20 asset. Okay, we can start with the same chart template that we just created for API 3. Mean dollar invested age here in pink. We want to look for really large drops as a sign that dormant tokens are moving. That's what happened here in early January, but prices didn't really do much. I'll plot the BTC price once again so we can see a bit of a more direct correlation. Put that in green. So the mean dollar invested age drop occurred here, and there really was not much reaction at all. It was just a continued decline. And I think more than anything, this is unfortunately due to the overall decline of most cryptocurrencies in the sector at this time. Of course, I would guess that the reason it was requested is because we saw a huge price uptick for UMA. I think something, we put it on our Twitter, there was about a 70% rise over the span of just a few hours, like 3 to 5 hours.
Here's a very good thing. I want to say something. Now, when I'm looking into it, just to make sure you can add age consumed. I'm pretty sure there was quite a lot of spikes or
I'll take off the network growth here.
Yeah.
So these blue spikes, the huge one occurred right at the mean dollar invested age.
This is what I was expecting. You see, on the falling market, when you see this kind of reaction, which is both visible in age consumed and the mean dollar invested age, long-term holders pull the plug. Quite often, it happens after a long time decline, and this is almost always a sign of very rapidly approaching turnaround. Because if someone is panicking or feeling not good for holding tokens anymore, you can reflect it to yourself. When do you usually feel like this? You sell the bottom or close to the bottom. And this is feeling where all of us have to deal with. And exactly this feeling represents age consumed and mean dollar investation, a few others like exchange inflows. You can see it. And the moment you see it, and there was at least 1 or 2 months before decline, you can take on the risk and build a position, which some people did, and it's recovered actually almost above the level when these holders panicked or did something. And generally, it's a good sign. I would only, can you increase to 1 week resolution and then take daily active addresses 24 hours? I want to see if it was very low value. If we see a very low value initially, or the edge consumed, you can remove.
Okay, take it off and look at network growth only?
No, only daily active address 24 hours.
Got it.
It's just
24 hours, sorry, 1 sec.
Yeah, it should be, otherwise you will not see anything. So, and take just last month.
And you said 7 days, right?
No, yeah, but 1 month is also okay.
Here, let's look at 1 day instead.
Wait, is it correct data?
Active addresses 24H 1 day. Last month showing.
Okay, because it looks a little bit weird. Okay. Yeah, and the lowest volume in the middle of the chart, how much was it?
So we were looking at 59 active addresses on February 18th with a max of 753.
Okay, and now we are at?
Currently sitting at 336.
Interesting. It's like on every day the same, yeah? Is it? I would like to double check. It looks a little bit weird. The last 3 days, every day is the same value, just to make sure it's correct. If this is correct, it means it will go down now, and then you can rebuy it. We saw the huge spike, and there is no follow-up. People are not buying it yet. So typically, no, you have no really need to take it like on short resolution, like no. 1 hour.
I'm just trying to put the price and active addresses on the same plane here. If I put it on 1 hour, let's see if anything changes.
Oh yeah, now it looks much better.
Yeah.
Maybe it was 1 day resolution.
Yeah, probably best if we're going to use the 24-hour active addresses metric, best to put it on 1 hour.
Okay, and now change back the price to I don't know, 5 minutes resolution or 15 minutes.
Yep.
Good.
And this is the price BTC, by the way.
Oh, even better. So it really outperformed BTC. So I would expect now to go down to correct. And maybe you will get even better entrance price. But the whole picture, taking into account the Sage consumed happened before, generally looks good. What happened with API today? Okay, they built something probably. It's UMA. Okay, I didn't follow up on them for quite some time.
Yeah, UMA, I saw on the whale side, there was some interesting stuff happening maybe about a month ago. Prices, I think, what's the overall USD price? It looks like it's sitting at just under $10 right now. So if we look at the whales that are sitting between, get rid of this, the whales that are sitting between 10,000 to $1 million. So that should be around $100,000 all the way up to $10 million owned. So these whales over the past month are on the decline. If we zoom out a little, let's get some context for the last year. So yeah, the overall whales over the last year, despite the recent decline, it's still kind of a drop in the hat compared to how much accumulation has happened over the past year. As far as alpha goes, I'd say there's an argument for legitimate alpha, seeing a big spike like this correlating a few days prior to the huge local top. This was, at least against Bitcoin, I believe this was UMA's all-time high. And then it's kind of declined here. We do see that, the mid-term accumulation that occurred here in the summer led to another big local top. But, this is where it gets a little wonky because they continued accumulating, but just as what's happened to a lot of altcoins, the price has declined right up until recently when we saw this very small accumulation. So a little bit alpha there, but UMA may just need a little more time on the markets to start seeing a very clear picture for how supply distribution can help.
Mm-hmm. Yeah. Also, can you see for smaller holders with the balances all the way up to 10,000 in USD?
So all of the small ones up to 10,000?
Up to 10,000 USD. I don't know what is the price of UMA?
It's $10. So we'd be looking at up to 1,000 coins.
Yeah. How is it behaving? Good. So they're not buying at the moment. They're not buying at the moment. There was, of course, fish in the bottom, which is typical. And now when the real bottom came, no one is buying. It's good. Yeah, looks interesting. Interesting.
I would love to see.
To my taste, I would wait for pullback. To my taste, but it's just my approach, and sometimes I'm wrong because there is no pullback.
Yeah.
Yeah.
Yeah, I mean, the main thing I'd love to find is any sort of foreshadow that the price would spike, 70% like it did a couple days ago. I see an exchange outflow spike, but this was a lot of coins. This occurred right when the war news broke. Then there was an inflow spike. So definitely some polarization on what was happening as far as the flow in and out of exchanges. Supply and exchanges had a steep drop off. Again, that's just related to exchange flow balance. MVRV, nothing special. Of course, it spiked high after the rise. That's expected. Yeah, I mean, I would love to find out some warning sign, some sort of alpha that could have told us that UMA was going to have this. But it looks like it was pretty kind of an outlier, a bit of an anomaly. The development activity isn't looking so great. That's interesting to see. I mean, at least relatively for the past year, it's moving in the wrong direction. It was sitting 74, 75 submissions a day, and now it's down to about 19, 20. Dominance, nothing special until the spike. There was, of course, some increased discussion about it. Weighted sentiment, nothing too special going on. So yeah, I would love to know in chat if you guys had any insight as to why the spike occurred in the first place. Sometimes it's just a small group of traders or one big whale that decided to make a move and the price pumped as a result, and suddenly people became interested for a short period of time, but not really sure. Not really sure. Why don't we take one more asset and see if we can break it down, Balresh?
Yes, the third one in line would be Anchor, ANC.
Sure. So Anchor is not an ERC20, meaning we are going to be a little limited on what we can look at here. We do have things like development activity. So if we bring this up, I'll zoom out, see what the all-time landscape looks like. If we go back to 2018, so it's a very new coin. Clearly, it started trading just about 1 year ago. As far as its overall development, it's not showing much special notable signs right now. It's seen its share of large spikes in development activity, but if you look at the top left of my screen as I'm hovering, that number isn't particularly high. For example, UMA, we just saw that it was getting about 70 development activity submissions per day at the beginning of the year or 1 year ago, and now it's down to 19 or 20. That's still a lot more development activity per day than a coin like Anchor is getting. It's certainly not nothing. It's not like a Bitcoin Cash or a Dogecoin where we see almost no development activity on theirs. But from what I'm seeing, not a ton of development activity going on there. Social dominance, huge spike right before it began getting publicly traded, and prices were opening at about $5 to $7. Let's see. I will definitely zoom in from this spike because this, wow, so about a year ago, it got about 5% of all discussions at one point right before it started trading. Let's look at since the beginning of the year or so, how things have looked for social dominance. All right, so that's going to be a little too granular. Let's look at 1 day. Interesting. So clearly people are interested in Anchor for the obvious reason, which is the fact that it's surging like crazy right now. It's up to about 489 after being as low as 127 about just a bit over 1 month ago. So huge increase from here. If I shift and hold, we're looking at an increase of about 281% during that time. And social dominance has jumped up to a high of about 0.06%, which is a lot for a coin that's only been around a year. Absolutely. This would be bearish though. If we're looking at, here, I'll zoom it out to the last 6 months. Over the last 6 months, this was the largest spike in social dominance we've seen since October 3rd, where we saw a then local top of around 330-ish or so before declining. We saw the opposite effect here. So this is a perfect illustration of how social dominance works. You see the crowd start to jump on and really recognize an asset. It's usually going to turn the opposite direction of what the price is doing, at least temporarily. So we saw the reversal here. We saw a mini reversal here in a good way because this was around the bottom. We saw very short-term reversals, one here, and then here we maybe saw an argument for a very tiny reversal, but prices are just continuing to surge. I'd be a little concerned though, because social dominance is at its second highest point since, at least in the last 6 months. So, it's important to watch what social dominance here. Does it stay high now that prices are above $5 again? Or does it drop back down and people are ignoring it because Bitcoin's declining? That could be a good sneaky opportunity to continue riding the wave up if Anchor is being pushed under the radar due to bigger news. So very interesting to see there on the social dominance end. As far as weighted sentiment goes, let me go back to 1 year. Yeah, so people are quite euphoric. This would be a bearish sign for the very short term, at least. Obviously, the sentiment was hugely bullish relative to what's happened over the past year. Right before it started trading, people were obviously hyped about the asset. Had a very positive spike right before the local top here. That was good alpha. Pretty good alpha here too, right before the local tops here. Interesting to see that there was really positive sentiment here as prices were falling, but there were so many assets that were seeing wonky weighted sentiment around late January. It's hard to really say. And then we saw negative sentiment occur at the beginning of the month, as we saw with a lot of assets right before. For most assets, they saw a mini surge around here, but Anchor just kept on going and is now almost 2 points above its normal standard deviation for weighted sentiment. So all things considered, this is a pretty big yellow flag, something to keep your eye on. It doesn't mean for the long term things are just going to drop all the way back down, but history usually tells us that when euphoria starts to kick in like it is here, people can get a little bit greedy and trapped, and prices will drop, and they'll see a big negative value to their portfolios. So be a little wary of this and watch weighted sentiment. I think of all the metrics we looked at, this one's going to be the most important for Anchor on Santiment right now. Cool, guys. We're about 18 after the hour. I think we covered a substantial amount here today. I hope this was helpful for those of you who've stuck around for the entire call. Thank you so much for the support. We really love to show off the metrics on a weekly basis like we do. Expect more videos sprinkled in before our next This Week in Crypto. There's going to be plenty to update as Bitcoin decides whether to stay above 40K or drop below. Any other questions you have, feel free to shoot them our way on Discord. Don't forget about your referral link in your account settings where you can share with anybody on your Twitter, Discords, Telegrams, and get 25 to 35% of their first purchase sent straight to you. Also, don't forget about SANR, guys. I didn't bring it up on the call, but it's ramping up and we're seeing more and more participants jump in and make predictions about the markets. We give out SAN token to the winner, a pretty substantial amount. You can win hundreds or even thousands of dollars worth of SAN to do what you would like with. And it is very cheap to make market predictions. And I hope you guys check it out. Even if you decide not to, you can still follow others and see what some of our experts and both amateur and pro traders are doing with their holdings and seeing how they're calling the markets next. So just a couple of quick announcements there, and really appreciate all of you. Have a safe and happy weekend, and we will talk to you very soon.
Thanks, Brian. Thanks, Mike. Talk to you next week.